This week we're in the full swing of corporate earnings results, and today we're going to be focusing on companies within the tech sector, consumer discretionary and industrials. Today we're going to be really focusing on corporate earnings from some of the world's largest companies. We're going to start at the tech sector with Tesla and Google. Tesla failed to meet analyst expectations in terms of profitability. So profits actually fell 45% in the second quarter. So that's the world's largest electric vehicle maker. Disappointing. It's been challenged after it laid off workers. So that's eating into profitability, and also it's facing slower sales. It's investing a lot as well into artificial intelligence infrastructure, so that's pulling down on profits. Now, we heard from Elon Musk, the CEO, after the results were announced, and he failed to soothe investor concerns after he said that he'd be delaying the planned launch of self-driving taxis. And so if you looked at the share price and the share price reaction, it was down 8% after trading. Turning attention to Google, Google actually surpassed expectations in terms of revenues. It continues to see really good demand for its cloud computing services, but also its advertising on its search engines. And this is, I suppose, a positive for Google, given that it's facing quite stiff competition from AI and chatbots from the likes of OpenAI. So that's not yet having a real dent on revenues. If you can see, if you look at revenues from its advertising division, it was up 14%. So more positive story from Google. If we now turn attention to consumer discretionary with luxury brand company LVMH, so that's Louis Vuitton Moet Hennessy. Actually, what we're seeing there is continued weakness, and that weakness from the wealthier shopper coming from China. So China sales, or Asia sales ex-Japan, were down 14%, and that just builds on the weakness that we saw in the first quarter. So the Chinese shopper really pulling back. And if we look at the results actually from Burberry earlier in the week, the sales coming from China were down 20%. So a real trend coming through there as consumer demand from China is pulling back. Now let's just finish off turning to the industrial sector with United Parcel Service, or UPS. Their shares actually fell by the most in 15 years, down 13%, as their profits missed analyst expectations. Shipping volumes were up, however, the volumes that have been shipped were smaller and less profitable. You're seeing the customers actually being more frugal, choosing lower cost ground offerings rather than the more expensive air travel offerings. So the more frugal consumer, and that's weighing on profitability for UPS. Now that's everything from us today. We'll keep you up to date on more corporate earnings throughout the course of this week and next.